Welcome to Beyond Just Money by 𝐂𝐤𝐴 Media, an independent global media house and investor relations group. Please note that this podcast is for information purposes only. It's not a solicitation or recommendation to buy, sell or hold the stocks of any company or companies or engage in any investment activity under discussion. 𝐂𝐤𝐴 Media is neither licensed nor qualified to provide investment advice through this platform.
Welcome to Beyond Just Money with me, Samta, and today with me I have Nidhi Sinha, who is the head of content for 𝐂𝐤𝐴 Media, as our guest speaker. So Nidhi, crypto enthusiasts, I suppose, are already aware of Cardano and other popular cryptocurrencies such as Bitcoin and Dogecoin. And if you look at the current year, it has been an action-packed for cryptocurrency market. Many of these cryptos have had a massive bull run, starting from last quarter of 2020 to the massive fall from their respective all-time highs in the last month. So which cryptos do you think are worth looking at?
Thanks, Samta. It's always a pleasure to share insights on the buzzing crypto market. So the current bull run in the crypto space has spurred the interest in these volatile assets. While many have rushed to include Bitcoin in their portfolios as the safest crypto, others have looked at altcoins for more growth potential attached with higher risk. One such altcoin is, of course, Cardano.
So Nidhi, can you educate our listeners on what exactly is Cardano?
Cardano can be termed as a third-generation cryptocurrency which offers enhanced functionality. It has been designed to tackle the scaling problems with the first-generation cryptocurrency Bitcoin, which initially introduced the idea of digital coins. Now, Ethereum, which is known as the second-generation crypto, expanded the use cases for altcoins by introducing smart contracts. Its two-layer network architecture goes one step ahead and not just facilitates digital payments but also allows to exchange assets via smart contracts. So now, as we know, Cardano was also developed by the co-founder of Ethereum, Charles Hoskinson, and this is much similar to the DeFi technology on which Ethereum was built on.
Right, Nidhi. So the million-dollar question is, will Cardano be successful, and where do you see it in, let's say, 4 years from now?
So before answering that question, let's have a look at a few key factors about Cardano and Bitcoin to gauge which one could be a better investment. So apart from many technical differences between Bitcoin and Cardano, the most significant one is the way in which transactions are processed. Despite being much popular, Bitcoin's blockchain technology has faced a lot of criticism for following a relatively slower process and consuming a lot of energy, making it much costlier than some rival coins. The blocks created in Bitcoin's blockchain network require powerful rigs to solve complex equations, which is essentially, the lifeblood of the blockchain technology. The problem with this protocol is the time taken to create these blocks, which may take up to 10 minutes. To put it in perspective, on the Ethereum network, it can be done under 20 seconds. Coming to Cardano, it can handle at least 257 transactions a second compared to Bitcoin's 5 transactions. This certainly makes Cardano a preferred choice over Bitcoin, but it doesn't stop there. Charles Hopkins claims that it could be further scaled over 1 million transactions a second in the future. The next issue to be discussed is the supply and demand equation, which basically determines whether the underlying would likely to move up or fall. Both of these coins have a built-in devaluation mechanism. For example, Bitcoin's total supply is capped at 21 million, which simply means there'll never be more than 21 million Bitcoins in circulation. Moreover, the reward a miner gets in the form of Bitcoin is halved after every 210,000 blocks. This helps Bitcoin to maintain its scarcity, as higher demand would ultimately lead to lower pace of Bitcoin coming in circulation. Cardano also works on the same principle with limited supply. However, the maximum Cardano that would ultimately be there in the system is 45 billion. As with Bitcoin, the reward given out for validating a Cardano transaction reduces at varying intervals.
So Nidhi, can we say that the Bitcoin mining is much more power hungry?
The reason Bitcoin mining is much power hungry is because it uses a proof of work mining model. As the value of these cryptocurrencies increases, mining them becomes more profitable and more people want to mine them. By its design, only one Bitcoin block can be added every 10 minutes. If more computing power is added, the mining becomes harder and it requires more energy to essentially come at the same endpoint. This inefficiency, is built into the system. On the other hand, if you talk about Cardano, it works on proof of stake model, which allows only those people who own some of Cardano to validate the transaction.
So to conclude, Nidhi, what's your take? Is Cardano better than Bitcoin?
Well, there are many ways in which Cardano is better than Bitcoin. However, one thing that cannot be ignored is the global acceptability of Bitcoin, against which no other rival coin comes even closer. Also, there is a lot of talk going on to find a more sustainable way to mine Bitcoin, which could also add more weight to its preference. So if the question is, can Cardano replace Bitcoin? The answer is that Cardano is more energy efficient and capable of solving the problem of scalability and could have a better growth outlook, but it is attached with higher risk. So the question of replacing Bitcoin really looks doubtful. Investors have realized the inefficiency of Bitcoin from an environmental perspective, as the mining activities cause lots of waste. Moreover, Cardano is a green coin and considered to be environmentally friendly. The mining process is more efficient when compared with several other cryptos. Thus, the sustainability factor would benefit Cardano, as it would boost up the investors' sentiments. Many industry experts, in fact, even believe that it could take over Ethereum because of the proof of stake method, as Ethereum is still in the early stage of developing it. Nevertheless, it has the potential required to outperform other cryptos in future.
Thank you so much, Nidhi, for sharing with our listeners and help them understand better about Cardano versus Bitcoin and what Cardano really is.
Thank you, Samta, but I would want to reiterate that, investors have to look at the higher risk factor.
Absolutely. And on that note, we come to the end of this interesting podcast. And to listen to this podcast again, please log on to our website, that is 𝐂𝐚𝐥𝐿Kindmedia.com. Or you could also go to our YouTube channel, wherein we have a lot of videos and the podcasts from the past. Do not forget to like, share, subscribe, and hit that bell icon to get the latest notifications on the videos and podcasts that are uploaded. Until we see you next with yet another insightful episode of Beyond Just Money, this is me, Samta, saying goodbye, and as we always say, stay apprised and invest wise with 𝐂𝐴LKInd, your best guide.
Our listeners are requested to make their own inquiries about any investments, and 𝐂𝐿KInd Media strongly suggest that the listeners seek advice from a financial advisor, stockbroker, or other professional as necessary. 𝐂𝐿KInd Media hereby disclaims any and all the liabilities to any listener arising from any use of the information shared or discussed in this podcast. This podcast is available for personal and non-commercial use only.